Hey, welcome to the Fireside from beautiful Puerto Rico. In fact, today's episode is all about teaching you how to soak up the sun in Puerto Rico instead of grinding away at your tattoo shop in Oklahoma City. That's my guess where you're watching this from. In fact, this is a bold Fireside prediction. I think by the end of this episode, you'll have the financial wherewithal to buy your own Caribbean island, sail off into the sunset, and just do whatever tattoos you want to do on your own island. Now, that's a Fireside guarantee. Hey, welcome to the Fireside. You actually may not be able to buy an island at the end of this episode, but hopefully you will get a head start on financial management. Our guest today, Ryan Roi, has been a tattooer and been coaching financial management for tattooers for a few years now. And this is a topic I think that we just don't talk about enough. An episode like this is proof to me that tattooing has come a long, long way since we first started this podcast back in 2013. Financial management at that point in time was kind of cash only, stick it under your mattress for a rainy day. But today is a new day. Ryan is going to give you some tips on how to automate investing, how to generate passive sources of income so you aren't so dependent on tattooing week to week. If you get hurt, if you get sick, you can afford to take a few days off and get better without worrying about paying the bills, all that type of thing. So I hope you enjoy the episode. If you do like this type of content and would like to see more of it, I'm happy to provide more. This is something that I'm really into as well. I love the ideas of generating passive forms of income, so I'm not so dependent on working with my hands and trading hours for dollars. The longer that you tattoo and the older that you get, you realize that's just not a very good trade-off. The older you are, the fewer hours you have to give to anything. So those hours become more and more valuable, which is why you need other sources of income to help offset your tattooing. So let's go ahead and get to the episode. I hope you get something out of this. Like I said, if you'd like to hear more of this type of content, I'm happy to bring on more guests from the financial industry or share my own ideas. Thank you for supporting what we do, and I'll see you at the end of the episode.
Hi, I'm from Brooklyn, New York. I'm at my shop right now, Lowdown. And I've been tattooing for about 15 years. And over the pandemic is when, shutting down the studio for the shut. I didn't close it, but it was in a different location. It was actually a large private studio back then. I had played around with the idea of financial coaching or getting into financial advising for a couple years. Just knowing it was something I struggled with and just knowing that it was something that the tattoo industry desperately needed and just didn't really see anyone doing it, but I was busy tattooing, so it wasn't going to be, I didn't have the bandwidth. And then my daughter was born a couple months before the pandemic. So the pandemic hit and I was like, damn, I need to figure out how to make some money online. Maybe this financial coaching idea is going to be a thing. I don't know. And, I started the process. It was a year and a half later that I actually made my first dollar doing it. But it, by then I had gotten the gear. If I go into something, I go 1,000% in. I don't really have a middle ground. So tattooing was slowly becoming the thing that was like the side thing, and there was like a weird in between time where I was tattooing half the time and coaching half the time, doing one-on-one coaching. And about a year ago is when I had a really long wait list to work with one-on-one clients. I kept raising my prices higher than they are right now. And I was just like, man, it's going to get real inaccessible. It's not a scalable model. And so then that's when I decided to do group coaching, and I hired some people to help. And now a year later, I think we've worked probably with around 200 people in the last year, which is way more than I could have done one-on-one. Wow. And yeah, we're actually, I think we can't even take any more call. We do these hour-long consultations. I actually have a coach now that does them for me. And I don't even think we can take an appointment right now. It's so stacked out with appointments. So yeah, it's pretty cool.
So that's super cool. That reminds me a little bit of I'm a member of Strategic Coach, and I have been for 6 or 8 years. And it's more of a business and life kind of coaching outfit. But the same thing, the guy who started that, who is not my coach, he has lots of coaches under him at this point, but he same thing, early 80s. He was doing one-on-one coaching and just realized that it hit this kind of ceiling of complexity for him where he just couldn't, he was not scalable at all and couldn't have the impact on entrepreneurs. This is an entrepreneurial coaching kind of outfit. And started the same thing, started doing group coaching, and then realized what a huge impact it had when kind of how the group became kind of accountable for each other.
And we've seen that. I was worried that like something was going to be lost in going from one-on-one to group, that it would be diluted. And although I really do like one-on-one coaching, and I've now trained a one-on-one coach that works with my clients one-on-one, and have another guy coming in who's actually a tattoo artist who I'm stoked to start working with to give that one-on-one like hand-holding element. I think it's really valuable to have that. But then there's this cool thing that happens in the groups where someone asks a question that's on someone else's mind, but they forgot to ask, or they're scared to ask for whatever reason, and then these conversations happen. And I think also because you've been in coaching programs, like sometimes when you're the one on the hot seat and you're getting asked the questions by the coach, like you don't see it, but when you're watching someone else have that conversation, like you see it, it's like reflected back to you, the same stuff you're dealing with. And so I think there's this really cool synergy that happens in the group format.
Yeah, I completely agree. We do a lot of kind of thinking exercises. My coach is really big on visuals and worksheets, and kind of solving problems by writing things out. And one thing that I found that I appreciate so much is we'll fill out these kind of worksheets or these thought exercises as a group of maybe 25 people, and then we'll break off into these little breakaway groups of 2 or 3 or 4, and just kind of share our ideas back and forth. And obviously the coach is facilitating the worksheets and the way that the day is going, but all of the value that I'm getting, almost all the value I'm getting, is coming from the other group members. And through us working through those exercises together, just like you say, you're seeing someone else struggling to answer a question that you're struggling with, or maybe you see something clearly that they're not seeing clearly. But just it's that back and forth that makes such a huge difference. Let me back up a little bit. How did you end up interested in? You've been tattooing for 15 years. Were you just a financially responsible kid?
No.
Or were you into?
I was a financially irresponsible.
How did you find
kid.
yourself? Okay. Well, how did you find yourself interested in? I mean, when the pandemic came around, how is it possible that coaching was one of your options?
By that time, so I had a private studio. Like I left around like 7 years into tattooing. I was just like, I'm done working for people. I just can't find a spot that feels like a good fit. So I opened up a small private studio just for myself, and then I did take on an apprentice. And then I had another artist that wanted to work out of the studio, and then we got a bigger studio, and then that apprentice graduated, and then I took another apprentice, and then we got a bigger studio. And so we just it just kind of kept naturally. I was not seeking people out. I wasn't seeking out apprentices or any other artists ever. And people just kept kind of wanting to work with me. So it was really cool. And so I realized somewhere in that journey that like I was like probably like 26, 27. I was like, retirement. That was like the first thing on my mind. I was like, I know I'm bad with this stuff. I know that if I keep putting it off, I'll just put it off forever, and it'll be a really big problem later on. So let me just like figure, and then like also the tax thing, like taxes were so stressful. Didn't know what I was doing. I was like, if I want to do the retirement and the house thing, well then I got to do the tax thing. And I was just starting to put the pieces together for myself. Stumbling through it, like, machete through the jungle kind of feeling. And it's something like clicked at some point. I don't know when, but it was just like all of a sudden I wasn't reading or researching or watching videos or listening to podcasts because I wanted to learn more. I was listening because I was really passionate about it. And I was like deeply interested. And I would talk to my clients about it. We'd be tattooing, we'd be talking about, they're an artist. And like, so what's your retirement plan? You got the Roth? You got the traditional? Which one you got? And they're like, I don't know what the fuck I'm doing, dude. Like, and I was like, oh, dude, you should look into this. And we'd have these conversations. And then I would get emails from clients saying like, stoked for my next session, looking forward to that financial conversation, looking forward to diving back into that. I'm like, this is cool. Like, this is weird. This is not where I thought things would go. And so it became like a passion in the same way that tattooing was a passion. And now, and I've said this many times, like I never thought I'd be more passionate about something other than tattooing. And this is a far greater passion of mine that I never thought was going to happen.
Isn't that interesting? And I completely see where you're coming from. It comes from those like genuine conversations, sitting there tattooing people. You're stuck, shoulder to shoulder for hours anyways, and conversations go wherever they go. And you do find as clients come back, especially with larger pieces, multi-session stuff, they come back and you pick up on the thing. You start talking about what you've learned about the topic since last time, no matter what the topic is.
Right.
I wonder, did it turn out that some of your first coaching clients were your tattoo clients because of that?
Exactly. When I posted it on Facebook, the first time I posted anything about it, there was like 2 or 3 people that I had tattooed before, and they're like, Ryan, thank you. Yes, let's do this. And like, they were my first beta clients. And so like, I maybe made a little bit of money right in the beginning, but I was spending a lot on education. So I was not profiting, and I was charging them barely anything. I just wanted to like get those reps in, like you're doing your first tattoos. I just wanted to make sure I could provide value to someone and make a meaningful difference in their life. And so, that's exactly how it started.
Do you find, because obviously there are no, like in my coaching group, for example, I would say 40% of them are financial advisors.
Really?
There are no tattooers. I'm the only tattooer, but it's an entrepreneurial coaching group, but so many of them run,
I gotta join your group.
Either. Yeah, right. They're either, CPAs, or they have some tax background and investment background, a lot of advisors, and they, so my point with that is that it's funny that tattooers obviously have access to investment and tax advice, just at the click of a mouse. Yeah. Do you think it was important that they were talking to someone who came from their world? And if so, why is that such a big deal to tattooers?
Yeah, 100%. And we heard it many times in our testimonials that we take, that was people's like kind of initial feeling was that they just had experience with financial service professionals. And I've had many experiences with CPAs and advisors. I fired my first advisor after learning enough on my own, because I eventually did get my Series 65 and worked as a financial advisor for a wealth management firm after 13 years of tattooing. And something can be good advice, but it's not the right advice for you. It doesn't mean it's bad advice. It's just not the right advice for you. And so I've seen that a lot. I have seen, now that we've worked with hundreds of people, I've seen so many CPAs giving people incorrect information, like shit that is illegal, shit that is like can really get them in trouble. And so I think also just like, one of my first clients, my first beta client, who was not a tattooer, she was an acupuncturist. She was a tattoo client of mine. She's like, yeah, I'd rather talk to you than like Chad from Fidelity in a blazer about my finances. Like, I'd rather talk to some guy with like tattoos on the side of his face than Chad. And I was like, I totally get it, So yeah, there's, I'm stoked when I'm like talking to someone with like full face tattoos about their retirement plans. Like, I'm lit up that conversation's even happening in a way where we're both connected. It's not like talking down to, or it's not going over their head. Like, we're connected, we're looking at their future, and we're creating what they want that future to look like. And then we're talking about like saving strategies, money management strategies. And then, because I don't work as an advisor right now, I refer people to like Betterment or Robo-Advisor. I make it real easy to understand, what it is that they're actually doing, but ultimately the platform would be doing the advising in that sense.
Right. What do you find is the biggest hurdle with where do tattooers, if they've never saved a dime in their life, where do they struggle the most early on? Because I know not very long ago at all, and I'm not too involved with tattooers and their finances at all these days, but getting tattooed, even by very high-level tattooers over the last, say, 8 or 10 years ago, we're still full cash, no change. You can't even PayPal me. I don't want Square. I don't want any of that. So we've gone from, in a relatively short period of time, from cash only, and I've heard you say in some of your in some of your Instagram reels, talking about that kind of pirate mindset and tuck it away and hide it under the mattress and all that. From that to talking about IRAs, what is that what are those early conversations like with
Yeah,
people?
it's a good question. I would say, first of all, I'd say probably like, I'm going to say somewhere between 60 and 80% of the people that we work with have never consistently saved money their entire lives. And we have a lot of clients that are actually paying to work with us with credit card or with a PayPal credit or something like that. Most of the time they'll actually pay that off within the time frame of the course, and then they're, for the first time in their lives, like actually accumulating savings. Because I think a lot of people, even if they are taking digital payments or they're depositing cash, I'll have these conversations with people before we work together, and I'll be like, cool, how much are you saving? They're like, oh, I'm saving like $500 a month. I'm like, all right, so at the end of the year, you have about $6,000 saved. And like, no, because, something happens. I'm like, all right, so you're not actually saving. And like, that's a kind of a revelation for a lot of people, that they're not actually saving. They don't want to look at it. It's kind of weird. You'd think like it shouldn't be a surprise, but it is actually a surprise. When I talk to a lot of people, they're like, yeah, actually I've been tattooing for 20 years and I haven't saved money. And so the distance from like pure pirate mode, saving nothing, to like getting into, retirement planning and stuff like that. And I'll tell people, like, it's not that it's hard or that it's super, well, some of it can be a little complicated. I mean, it can be like, you don't take it out of your hands. Take the money management out of your hands. Set up a separate account. Anyone can do this. Anyone listening to this can set up a separate account and set an automatic transfer to that account to happen on a weekly basis. Now, your income is irregular, so sometimes that can get tricky. And then I find you have all these other areas of your life, your living expenses, your taxes, your other areas of life that you want to save or plan for. Like sometimes you have an insurance payment that's $1,200 a year and you forgot, and it happens, or this bill comes up. And so I start simply with people, and like anyone can do that on their own. But then what we really want to get by the end of working together is that I call it the waterfall money system. Everyone's got their system. There's profit first, there's bucket system. I kind of like took a few ideas from different books I've read and things, and really developed my own system. I have not read about it anywhere. Anyone that I've shown it to, they're like, I've never seen a book talk about it like this. And it's a really effective way to manage money, whether you're earning a regular income or not. But if your income is irregular, you need to like stabilize. You need to find those regular aspects of your financial life and like automate that as much as possible, separate it. And that building out that structure for it, and then slowly increasing the automations so that less and less of it is in your hands, more and more of it is being operated by the system. That's the part where most people we work with, no, everyone we work with says they couldn't have done it on their own. I think, one, it's a little bit complicated. Two, it's just one of those things that you just push off. You're just like, yeah, I'll get to it. And then there's the bank, and the bank teller told me this. I'm like, go back and tell that bank teller that they're fucking wrong. Like, that happens all the time. Like, people get told weird, stupid shit. And I'm like, I know for a fact that bank teller told you the wrong thing. Go back and tell them this. And they'll do it, and they'll get it done. So like, there's weird obstacles that we help people navigate. And a lot of it is accountability, holding their hand, answering questions, because people deal with like analysis paralysis, or they're so afraid they're going to make the wrong move that they don't make any move. And so having someone right there who's been through, I've made all the mistakes, I've done it, I've refixed it, I've gone this way and that way. And so what took me 6 years to figure out on my own and put together, I can help someone do in about 3 months. So they're consistently saving. And the goal is that we increase everyone's savings rate by 10%. So if you're saving 0, we want to get you to saving 10%. If you're saving 10%, we want to get you to 20. If you're at 20, we want to get you to 30. And usually above 30 is really difficult to hit, but I've helped people hit 30. Yeah.
Yeah. And then, so outside of them automating, however they can best automate the money getting out of their hands and into some type of an interest-bearing account or an IRA or whatever type of investment plan you guys have put together, the thing that I've always noticed serves me really well is if I can sweep money easily and automatically from where my tattoo income goes in to someplace else, but make it very difficult to get it back out of there. So whether that's like one-way transfers or whatever, just make it hard. If you have online banking and you've got a savings account and a checking account, make it where you have to physically go into the bank to draw it from your savings, not where you can just swap it back to your checking really easily.
Can you do that? Can you set it so you can't transfer back?
My bank has that. I've actually got my grandmother set up that way because she is the world's worst saver. She lives in our guest house out back, and she has no expenses whatsoever. She has no rent. We pay the phone bill, everything. And so every time I look at her account, she's got $30 in there. Of course, she's on a fixed income. But it's like, why in the world do you have $30 in your account? Like, we have to set this up where you. So that's what we've done. We set up a savings account. Originally, it had the ability for her just to pull back and forth. And then we fixed that where now she has to physically go into the bank to get the money from the savings back to the checking. And it's made a difference too.
Yeah, I like that. If that works for you. And like, that's the thing too, is like everyone we work with is in such different scenarios. And then what started as like one model of the waterfall money system then got adapted into like the main model and then like 6 different variations of it. So we found that we do have to adapt things. I found a lot of the online banks that offer the best interest rates, which is what you want on your savings, don't have a lot of in-person locations, which is one of the ways they can offer the highest interest rates. And but to your point, I kind of look at it as like a slot machine. So a slot machine is designed that over a long enough period of time, less money is always going to come out than goes in. Now, sometimes more money comes out than goes in, but over a long enough period of time, less money is always going to come out of the system. It's designed to be that way. And so part of this is psychology and really introducing friction in terms of making it more difficult to get to funds where you want friction, and then reducing friction where you don't want it to be difficult, where you want it to be easy to manage. And that's kind of how the waterfall money system works. Is I set it up so that there's enough friction where like you can get to your money if you need it, but it's not so accessible. And then where the accounts that I want you to manage well and actually be looking at every single day, it's very easy to move money around and see what's there clearly. And so that's why this works for like literally anyone. Like, we haven't found a person that it didn't work for, because it works like a slot machine, except you're the house. So more of your money stays in your system than leaves the system over a long enough period of time. And do people occasionally have things come up and they're like, Ryan, I got my system, but this thing happened. I'm like, look, let's breathe and get back. And over the long run, this is going to work. And it does. And we've seen it time and time again.
Yeah. The thing that I've noticed, you mentioned earlier about a lot of the expenses, like say, your liability insurance, professional liability, or whatever it is, or expenses that come, every so often, every 6 months or every year. What I've always done for things that are big like that is divide it by 52 and just make my drafts weekly. And it's amazing how cheap everything is when you do it once a week, when you contribute to it once a week. No matter how.
I went to Iceland in August, and it was $6,000, but I saved up for a whole year, and it was like less than $200 a week or something crazy. And I was like, I barely noticed it. So by the time I bought my ticket, I took a tour around all of Iceland. It was like $3,000 for that, and like everything else, the total was like about $6,000, and it was like I didn't even have to pay for it. It felt like it was free. It just, because the money was just there by the time I was ready to do it. Right. Yeah.
Do you find that having not saved, working with people who have not saved throughout their lives, the concept of like compounding returns, or especially if they're investing in markets and they're getting dividend payments or things like that back, do you find that that's really foreign to people and they struggle to understand how those things work over time?
So much. Even like basic high yield savings accounts, like I'll get clients who be like, Ryan, got $4, got deposited in my high yield savings, and like, dope. Like, they're so excited by it because they've never had money come into their life for nothing. And with a high yield savings, you're not even exchanging risk for it. You're just letting them hold that money for you, and then they loan it or whatever they do. But it's a total. And then humans, our brains aren't they're not capable of exponential thinking. So you could say compound interest and you can point out these big numbers, and your brain like is designed to just not understand and not make sense of it. It's very linear. It's not exponential. So I do try to show a lot of graphs and charts, and I have some pretty amazing spreadsheets. And I'm not great. I don't design spreadsheets. I've hired people to like make these really incredible sheets that we use. And then when you can make it visual, because we're all visual learners, then it starts to click for people, you know? And so then we get into like, there's a whole emotional mindset aspect of money that no one's talking about. If you go to your CPA, your financial advisor, no one's talking. Like, I'll say to people, like, if money was a person, how would you describe that person? What would they look like? What would they wear? How would they act? What kind of music would they be into? And then, like, you know, a lot of people will describe someone and then they'll be like, do you want to hang out with that person? I'm like, fuck no. I'm like, cool. Why do you think that person doesn't want to hang out with you either? You know? And they're like, damn, like, that's how I relate to money. And I think of it in this way, whether you think it's evil or you think whatever, you know, it's corny or that's for da-da-da, whatever those ideas are, it impacts you on a daily basis. And those beliefs actually cost you money over a long, and I think very statistically, I think very like over time. So like over time, does that belief system cost you $1 a day, $2 a day? Like in terms of money you could be earning and money you could be saving had you had a different perspective. And so I'll joke with people. I'm like, you don't make enough money to believe what you believe about money. Your beliefs are too expensive. You're not in a high enough tax bracket to believe that. You know, it's an oxymoronic joke because you'll never get to that tax bracket. But like, it's costing you. And if you really think about it, what is it costing you to have an unhealthy relationship with money? And then over the course of your lifetime, shit, you know, tens, if not hundreds of thousands of dollars.
Right. Yeah. That's a really interesting way to think about it. I've never heard it put that way. I really like that. It's funny how people, you know, just spending my life in tattooing, how many tattooers I've known over the years who have that, I don't care about money. I don't give a shit about money. That's not why I even do this. Like that kind of attitude. And obviously that can't be true. It's really just, I don't understand it. So I would rather, I'm ignorant to all of that. It sounds like the type of thing that the people I don't care for or into.
Right.
So
yeah.
I'm not into it.
I look at money, it's like, I look at everything like creative medium. I look at doing my taxes like a creative outlet. And when I think artists are actually really great, I think artists are great at marketing themselves. I think they're great at dealing with money, but they don't pour that creative energy into that area. And so then we say artists are bad with money or they're bad at marketing or whatever. But I think they've just poured all that creative energy that you could pour into this area. And when I started looking at money as like, ooh, this is like this paint palette that I can design the life that I want to live with, it started getting exciting and fun. And it stopped being this like I like a challenge, right? That's why I like tattooing. Tattooing's fucking hard. I think that was one of the exciting things about it. And tattooing's harder than money, hands down. If you can tattoo, you can do money.
Right.
Yeah.
That's a good point. What do you think these days with, and I've even tested a couple of these, I'm using one called Wealthfront, but a lot of the AI-based kind of investing models that are really, I hate to say dumbed down, but they make it really easy for anyone to get involved in with very little investment. You basically just answer a handful of questions about your age and income bracket and risk tolerance, and it kind of builds and reallocates your portfolio daily in little microtransactions and things like that. Do you use many of those?
Wealthfront is a great one.
Yeah.
I'd say it's probably right up there with like Betterment, which is the one that I often refer people to. At a certain level, like they're kind of all the same. There's certain things, and I'm not going to get into it, that why I like one over another. But at the end of the day, like they're all pretty great. When I worked as a financial advisor and I like got hired by this firm, that I was like, this firm's like hiring this dude covered in tattoos, and they like put my picture up on the website and shit. It was cool. Like along with these like old Jewish dudes, you know, and me, I'm a young Jewish dude. And we get clients, and then they're like, oh, cool. Well, we have like a professional account with Betterment, and so we'll just manage their money through Betterment. And I was like, I thought I was going to like learn more about portfolio theory than I already knew. I thought I was going to like see like the inner workings of how this like financial establishment that manages, you know, $65 million does things. And then I was like, oh, we're just giving it to Betterment, and then they're paying me 1%. We're paying Betterment 0.25%. So, and then we're charging the client that 0.25 plus the 1. Meanwhile, like, it just didn't make sense to me. And I was like, why am I a financial advisor? Like, this doesn't make sense at all. And so I after a year, I just realized that coaching was what I wanted to do. I wasn't interested in managing a portfolio. I think they're great. It's like, at the end of the day, emotions are the most expensive thing when it comes to investing. Whether that's making a bad move and losing money on an investment, or the opportunity cost of being afraid and not investing. And what does that cost you, again, over the next 10, 20, 30 years? How much money could you have had you had a robo-advisor just doing it for you? And after myself, like, I got really into the stock market. I got really into investing and understanding and options trading and all these things. I thought the whole thing was a fascinating, again, like a living, breathing entity. And after, picking stocks and trading and doing this, like, after a couple of years, I like really sat down to do the math as best I could. And I'm actually not that great at math, but I know how to use a calculator. I realized that, like, I think I might have beaten the market. I think I might have beaten the S&P 500 in the past 6 years by 0.2%, maybe. And after all that, I thought all the time and the energy and the stress and the sleepless nights when my portfolio was not doing what I want, and then the excitement of when it did, and like all that energy that went into that, it's like, I could have just put this shit in the S&P 500. So I'm a big fan of the robo-advising because it takes all the emotion out of it, and I'd rather spend my time making money, doing the thing that I enjoy to do, and then taking a portion of that money and having the robo-advisor. I think over the long run, you're going to see the highest returns. You're going to, and now the one instance where I think it is okay to invest your own money, first of all, I'd say also use a robo-advisor, like, to do some of it for you. Don't manage all your own investments. But if you're interested, it can be useful in the sense that it keeps you in the game because you're starting to get interested in it. And I think that's what it did for me. So while I won some and I lost some, and maybe you could say it was wasted energy, it got me really interested and knowledgeable, and eventually brought me to the conclusion that I'm totally at peace letting my money be managed. I do have a financial advisor that I work with, and my tax and income scenarios are like a little more complicated. So in those instances, it can be really helpful to work with a person, a human being. But up until that point, just work with a robo-advisor. And then if you ever decide, okay, you know what, I either own property, or I have kids, or I need an estate, or I'm in a weird tax bracket and I've got all these things to balance, then you can transfer your account to a person, or you can leave it with the robo-advisor and start a new account. It's always movable. And I think that's the other thing. People are like afraid of opening a retirement account because what if I fuck it up? And it's like, you can roll it over into this one. You can transfer it to that person. You can get a financial advisor. You can fire them. You can hire a new one, which is what I did at one point. And I'd rather you make the mistake and take the short-term loss than not take the action and take that huge long-term loss.
Right. Yeah, back to your experience with working for the financial management company, that's the thing that I've learned working in the strategic coach group with a lot of financial advisors is they're really relationship managers.
Yes.
Almost no one that's in my group is making any calls on what to do with the money.
Yeah.
And that makes perfect sense. I mean, that you typically, if you were dealing with someone who was playing the role of what the robo advisor, what the AIs are doing now, they wouldn't be very great relationship people, I guarantee.
Right. Yeah, exactly. Yeah, the thing that makes you a great relationship person actually makes you a terrible investor.
Right.
And that's okay.
Yeah. Mm-hmm. What about the one thing that I've noticed is, I'm 48 now, and the thing that I've noticed as I've gotten older, and I've tried to relate to some of the folks in our Inside Fireside Club and just talking about kind of money in general, is you reach a point where it becomes almost impossible to trade hours for dollars, no matter how many dollars per hour you can generate, because you're as you're barreling past into your 50s and 60s or whatever, you have fewer and fewer hours. And so, of course, because there's scarcity there are fewer hours, they're more and more valuable. So it gets to a point where you could be tattooing at $500, $600, $700 an hour, and that hour at some point is going to be worth more than $500, $600, $700. So there has to be a way, a trade-off. And of course, the easiest way to solve that problem is to talk to someone like you when you're in your 20s or early 30s, not when you're my age. But it seems to me, whenever you talk to people in that, if you say like, man, if you just started an IRA right now at 24 years old, like you could probably do whatever you want. Like you'd be amazed at how fast that compounds, and you could do whatever you want at 54, 55 years old. That seems to just like roll right off or like in one ear out the other with that age group.
Yeah.
Is that, what kind of age groups are you dealing with mostly? I guess I could ask first.
So you'd think that we would mostly deal with the like 30 to 40 range. We work with a lot of 20-year-olds. Like we worked with like 20, 21, 22-year-olds. Not a lot. That's definitely harder to be like, hey, your financial future, and if you make these moves, it's going to be way easier later on. But we worked with them, and every time we do, I'm like, oh my God, I wish I had this education when I was your age, because this would have saved me $100,000 easily, and then we work with a lot of people in their 20s, in their 25, 26, 27. And then we do work with a good amount of people in their 40s and even 50s, a couple people in their 50s. And so it's like different challenge. It's like if they're younger and they're already at the point where they're working with me, like they're pumped, like they're motivated and they're taking action. So I don't actually have a hard time like motivating those people. Sometimes if we're talking about working with someone and they're like, not sure, whatever, right now is the right time. They think they have time, and it's like that's the most expensive thought to have, that you have time. It's a very expensive thought that you can't afford to think. And then you have the people that are, in their late 40s. Many people have been tattooed for 20 plus years, don't have anything saved. And they're like, well, I don't know if I'll ever be able to retire, but if I keep doing what I'm doing, I'm going to be just as broke as I am in 10 years. So something has to move. Let's do something, anything different. Maybe this Ryan guy can do something about that.
Yeah. A quick story from when I was in my early 20s. I was in late teens, early 20s. I was in art school, and I was tattooing kind of on the side, but I was in art school. And through art school, I worked as a customer service person for my grandfather's insurance agency for just a couple of summers. And I got licensed in property and casualty, so basically like home and auto and no health or life insurance. And because I had a license, all my friends who needed renter's insurance or had to get an SR22 because they had a drunk driving charge or whatever it was, like they came to me and I started writing those little policies, and they weren't much. But I remember the first time that a renewal came around and I got a check, and I was like, oh, I didn't sell any policies this month. What's the commission check? They're like, oh, someone must have renewed. Yeah. Like, oh my God, I get paid every time they renew. Like, like, oh, and that was my first introduction at 21, 22 years old to like passive income, to money that showed up without me doing work. And so I fell in love with that concept at such an early age that whenever I was tattooing in the early 2000s, I was tattooing and, $50 minimums and 50% commission splitting with the shops. I might make 25 to 75 bucks a tattoo. Some days I may not tattoo at all or do one or two tattoos, so there was no money in it. And I just started reading passive income books at that point. And I fell on one that changed my entire life. That's the dumbest name ever, but it was called The Weekend. It was by a guy named Mike Summey, and he wrote a book called The Weekend Millionaire's Guide to Investing in Real Estate. And he had the simplest little, like, it's all buying single family houses and long term. There's no flipping. You're not selling anything. He still owns. When he wrote the book, he was probably 70 years old, and he still owned the first rental property he ever bought in like 1958. That's amazing. Or something. Yeah. And so I like, it was so simple. It was so easy to understand that I did it. And this was 2004. I went out, I joined our local real estate club, just like they said, like he suggested in the book. I found a short-term hard money lender. I found a house that worked with the little spreadsheet thing that Mike Summey had laid out. And I bought a house and I rented it, and we still own it today. And I started, and of course this was during the bubble. This was 2004. Yeah. So that if you had a pulse, you could get a mortgage at that point. And so from 2004 to 2007, I bought an average of probably 3 or 4 houses per month.
Wow.
And so by the time the bubble hit, I probably had 46, 48 single family houses. And then it all fell apart. I didn't lose any houses, luckily, but you couldn't borrow. All the banks went under. For years, I didn't even know who to pay. The banks who had written the mortgages for me, they had gone under. And so I was paying one person this month and another company next
All
month. It was
buying the debt
bizarre.
and everything. Yeah.
Yeah,
Wow.
yeah. And so all the way up until maybe 2011 or 12 when it settled down and I started buying again. And my wife and I built it up to about at our height, probably 82, 83 single families. And over the last, from 2019 to now, we've probably sold 25, just slowly starting to slow down with them. But what I learned through that, and the reason I go through that entire story is that it hasn't been like always a profitable venture from a cash flow standpoint.
Right.
Like a lot of months we make no, we work and you have to replace 2 roofs and 3 water heaters and there's no money left over to pay yourself. And so that happens on and off. But what I've noticed is that if you do anything long enough, like you're saying, saving 10% to 20% to whatever, it's really hard to screw up in the long term. Because even if you overpaid in the real estate market, if you overpaid for houses, if you under rented them, they're not rented at market rents. As long as you are playing the long game, I look at that now and we've got, probably 50, 60 some odd houses, millions of dollars worth of real estate, and our debt has been slowly chipping away over 20 years. So now we have very little debt and a whole lot of equity. So even if we don't have cash, the worst case scenarios, we can still sell houses and cash in on all of that equity. So I guess the kind of bigger point is that those small decisions that you're talking about, looking at things over a period of years, those small decisions that you make consistently, it's very difficult to make a mistake when you are, to your point, like investing in, say, an index fund. And then, of course, there's always going to be a crash, and people are like, oh, if you've been investing for 20 years, you'd be upside down right now. It's like, well, yeah, that's these 2 very specific points in time you're talking about, But anyways, I thought I would just share that.
That's awesome. And like I do hear a lot of people like wanting to earn passive income, and they feel very confused by that concept. And I've had various streams of passive income, and I did buy an investment property a couple years ago. We did end up selling it. But yeah, I mean, it earned a little bit of passive income, but what was really great was the passive equity that it built. I mean, a tattoo studio can be, let's call it, less active income. It's not 100% passive. And I think that is a big, you need to understand, like, passive income is like investing in an index fund. Almost everything else, even the houses, to a degree, is less active.
Yeah, for sure. It's the houses are a job, whether it's your job or whether you pay management or whatever. It's there's work to be done for those.
But you're not trading time for money at that point. Is kind of like the way you want to think about it. You're not, if I have this many hours in a day, I can make this many dollars. That equation is not the equation anymore. And so I always tell people, like, if your goal is to earn passive income, whether that's through real estate or any other means, whatever business, it really comes down to solving a problem. And finding a problem that you can solve better, easier, faster, or cheaper than someone else. And if you can do any 1, 2, or all 4 of those things, you can very likely turn it into some sort of passive or less active income stream. And so starting to think about, so where do you start? It's like, what are the problems that I've solved for myself? Well, for me, I solved a lot of my financial problems, and then I turned that into a business. And I'm not trading time for money. I work my fucking ass off. I work 50, 60 hours a week sometimes. I love it. But my income is not capped by how many hours I work. And I hired a team, and I have employees, and I have people working for me. So even I'm not gonna drop it. It's an idea that I might even, but like, I'll just like come up with like these random things, and I'll be like, yeah, like, someone should just make this product. Like, it's stupid and easy, and it'd be cheap, and like, someone should do it. You'd probably sell 100,000 of them, and if your profit margin was $2 a piece, you make 200 grand. Like, when you start to think in that way, the idea will present itself, but it's also a matter of preparation. So like, I have savings that I could actually turn something into that. I could realize that idea. If you aren't saving over time, it's like, luck is, preparation meeting opportunity, right? So you've been preparing for years, you've been saving steadily, slowly, then all of a sudden an opportunity comes along, an idea or a situation or a problem that you can solve cheaper, better, faster, or easier than someone else. And you actually have the capital to like make that happen. And then we say, oh, that person got lucky. I was like, no, they prepared for a long time, and then an opportunity presented itself. Whereas the same opportunity comes along, but you didn't prepare, you're not even going to see it. It's like camouflage. It doesn't exist. So there's actually opportunities all around everyone listening all the time that maybe you aren't prepared for. That's all.
Totally. Yeah. And probably won't even recognize if you are broke. If you're constantly broke, you're always preoccupied with being broke.
Yeah.
And so even an opportunity could be very obvious right in front of you, and you probably won't notice it at all.
Yeah, absolutely.
Yeah. I think that's I think that mindset shift, just the difference in if you listen to someone like a Dave Ramsey or a Susie Orman, or those types that are trying to keep people from being broke, in their first baby steps, I know in Dave Ramsey's case, is like, just get $1,000, but just save $1,000. And for people who have never, and that seems silly for a tattooer, because a lot of us make more than that in a single day. And
yet we all save it. We make it.
Yeah, but if you don't save it, just knowing that, oh my God, if you've never saved anything, just knowing you have $1,000, and if the refrigerator goes out, you can buy a used one for $550 or whatever. Just what that does, what that frees up in the RAM in your mind, just to know, like, oh, I don't have to panic about this thing that I know is on its last leg. I know I have to put tires in the car, but I have no idea how I'm going to afford tires. Just those little hurdles of that not being a huge threat frees you up to think about, to focus on so many more things. And to your point, to recognize opportunities.
Yeah, I think ultimately, if I really look back, I grew my income. I did not focus on growing my income. That was never my focus. My focus was, from the beginning, when I was making $50,000, $60,000 a year, how do I save more? And because I read The Richest Man in Babylon, that book really resonated with me. I don't know if you ever read that one.
I haven't read that one.
It's a good one. It's, it was written 100 years ago by George S. Clason, and the rules, he talks about like the 7 cures for a lean purse. And the rules in that book held true then, and they hold true today. I'm actually reading a really good book. Do you like Morgan Housel? He wrote The Psychology of Money. I don't know if you know Morgan Housel. I read a lot.
No, I haven't read
Morgan Housel is a really good writer. That book, Psychology of Money, I'm sure a lot of people in your group have read it. Really beautifully written book. It's interesting. It's great stories. I'm going off on a tangent, but he talks about the things that are this. He wrote a book recently. I think it's called The Same. I'm not sure, something like that. Morgan Housel, about the things that have always been the same and always will be the same. And so this book, Richest Man in Babylon, talks about these 7 cures for a lean person. It's like those rules were the same then, and they're the same now, and they will be the same 100 years from now. So if you want to think about what's the economy going to do, it's like, don't worry about what the economy is going to do. Do these things. Save 10% of your income. But I focused on that, and I always focused on that. And then the miraculous thing that happened was my income started to grow. But because my focus was always on how do I keep playing the savings game, my income naturally grew. And they talk about it in that book, where there is sort of this like miraculous, it's not logical. Your logical mind won't be able to wrap itself around it. More money starts to come into your life. Weirdly, it does. And you've put this practice and this habit and this system in place for saving. So when your income grows, you keep more of it. And then I never really focused on growing my income. I always focused on saving and keeping more of my income. And we work with a lot of clients that are in multiple 6-figure income ranges. And even we've worked with people that are in 7-figure income ranges, and they're not actually saving consistently. And they might have some money under a mattress, but then, they're dealing with taxes or this, and, they can't actually do the things they want to do. So I think a lot of people are very focused on, how do I make more money? How do I make more money? It's just like, it's obsessive, and it's not actually solving the problem, because there's holes in your bucket. So if you pour more money into that bucket, you're not going to have more money.
So bringing that all the way back to something like doing tattoos and being focused on getting your hourly or your day rate up or something like that. Or getting more, social followers, thinking somehow that's going to convert to more clients, rather than focusing on creating, for example, the best possible experience for your client tomorrow. So maybe that has nothing to do with your day rate. It has to do with your bedside manner and with your the experience, or the things that you do in your shop to make it special. The thing that I've always noticed is when you focus on solving problems like that, or you focus on, for example, that customer experience, the money, to your point, just kind of magically shows up, whether it's through you tip more, or whenever you do raise your rates, you lose absolutely no one, and no one bats an eye at the fact that they're paying $200 extra for the day, because they feel like they've gotten way more value than that up to this point. But it doesn't start on the money side. It starts on that kind of service side, or that kind of what that desired outcome is.
I've been saying to people, like, don't focus on the price, focus on the value. And that goes for you when you're earning money, and it also goes for when you're spending money. And so many people don't get the support they need. I mean, I've paid a lot of money for coaching programs, but I wasn't focused on the price. I was focused on the value. And so the price was a no-brainer. I was like, there's no way that me doing this, even if this program does 10% of what it says it can do, it's still going to be worth the investment in the long run. And so when I focus on the value, and same as for your prices, stop focusing on should I raise my prices or shouldn't I raise my prices. If you keep raising your value, your prices will raise themselves. It'll be obvious because you'll be booked out. You'll have more clients. You'll have so many emails. You're overwhelmed, and then you raise your prices.
It's talking about the coaching program. It's the guy that started Strategic Coach, Dan Sullivan. He's a member of a lot of other kind of coaching groups that I've become involved with a little bit because of Strategic Coach. And one of them in particular is one called Abundance 360. This guy Peter Diamandis runs it, and it's a technology-based company. And I think that their annual kind of membership is about $25,000 a year. And Dan had a really interesting, he was on stage with them at the last kind of conference that they did, and they were talking about the price point. And he said, I always know that whenever I come here for this 3-day weekend, that I'm going to 10x my investment. So I'm looking for the connection or the idea that's going to make that happen that year. So every time that I'm here, I write a $25,000 check, but I know for sure that it's going to generate $250,000 in income for me this year. And I know it's going to happen in these 3 days. So I'm always listening, and I'm waiting for when it's going to happen. And it's like, that struck me because it's like that mindset is so powerful, for a guy to say that, for a 70-something-year-old guy to say, I know someone here is going to teach me something or partner with me on something, and it's going to generate $250,000 because I put $25,000 in.
Yeah. I was saying to my COO that she's not my business. She's basically my business partner. I call her my business wife because she's just like knows all the things I'm not good at when it comes to running a business, she's really good at, and all the things she lacks, I have, and we're a really good team. And I am going to work with a coach starting January, new year, and it's $8,000 for 3 months. And he's a performance coach. And all we're doing for 3 months is we're focusing on my evening and morning routine. That's all we're doing. We're just focusing on dialing in the evening and the morning routine, with my schedule. And I have a daughter, I co-parent. And so there's a lot going on. I've struggled to really dial in those hours in a way that I feel really serves, because it impacts the rest of my life. And I know that I'm going to work with this guy for 3 months. I'm going to find a routine that really works and gets me the sleep I need, gives me the energy, and gets me to do the work that I want to do. There's no way I'm not going to 10x that investment in 1 year. Easy.
Yeah. And it takes that mindset and that clarity, of looking for that. Like, when you expect it and you're looking for it, you'll find it, as opposed to like going back to what we were talking about earlier. Whenever when you're broke, you're in the broke mindset, and it's so hard to put any attention into anything other than getting unbroke.
Yeah.
Which you'll just never do. Unfortunately, with that approach.
I look at it as like a plant pot. So, you have your plant in its little pot, and then eventually it grows bigger, and it just can't grow. Your life can't grow any bigger than your mindset. And so at that point, you're going to struggle, and things will feel difficult, and it'll feel like you're treading water. It feels like you have to work so hard to get ahead 10%. And it's at that point, if you're at that point, you actually need a bigger pot, and you need a bigger game to play. You need a goal. I was just listening to something about, linear goals versus exponential goals, right? You're trying so hard to increase your income by 10%. That's a very linear goal. You need a goal that you think is impossible, because then you're going to play the game of life in ways you wouldn't normally play the game. And you might not hit that impossible goal in the timeline that you said you wanted to hit it in, but you need to play that game. Your life kind of depends on it. Like if you want to live that life, you have something that you don't have, or a way of life, or a quality of living that you want, you need to play for a bigger game. And if you look throughout history, I mean, there have been so many people from so many different backgrounds and different situations, and you can kind of see like, oh yeah, they were playing an impossible game or a game that they didn't think was possible, and they accomplished so much more out of it. And so, I'm a fan of Bob Proctor, and he says, if your goal doesn't scare you, it's not a big enough goal.
I agree. And I think especially if you're looking at trying to, raise your income, raise revenues in your business 10%, 15%, that's easy to do early on. That becomes more and more difficult as time goes on, because you will hit these sort of what we call ceilings of complexity, where there's just no way for the things that you did to get you from here to here can be the same things that get you from here to here. And so it takes, in a lot of ways, it becomes a lot easier to make a decision that 10x's your business. And I know that's such a cliche kind of term these days, but the easier to make a call that 10x's your business than it is to 10%
it is. It
your
really,
business.
really is. And it's not logical. And our brains are so designed, they so want things to be logical, and they cling to it. They're attached to logic. And exponential thinking is not logical. And so it can be really like kind of stepping off the cliff into the void of the realm that I don't know, that I don't understand. And you could say, oh, it's outside your comfort zone. But like, I don't think there's such a thing as the comfort zone, because I think you're uncomfortable where you are, and you want something, and you're capable of more, but you don't really know how. And you're staying in what's familiar, right? There's the familiar zone, and then there's the unfamiliar zone. So if you know that you're just like doing the familiar thing and like, I'm working so hard to get that 10% more money, well, maybe you need a goal that really inspires you and slightly, maybe even significantly terrifies you, because you're going to play the game of life. And I mean, I made so many mistakes. And I always say, you're avoiding having the breakdown, which leads to the breakthrough that you really want to have. But you have to have the breakdown first. You have to make the mistake. You have to look bad. You have to risk not knowing what you're doing. And eventually you will have that breakthrough that you've always wanted to have.
So that reminds me of, it's kind of a coach concept of ours, but we've been talking about in the Inside Fireside Tattoo Club, which is something we've been doing for a year or so now. We have these Mindset Mondays. We do them twice a month. And it's about a lot of these types of things. Not always this. Sometimes it's client relations. Sometimes it's money related, but it's typically mindset and kind of impact related. And we talked about the tendency to not make decisions because you feel like you don't have the confidence to do it. Like, I'm not sure that I know enough. I need to research that a little more. And that you talked about the analysis paralysis type of thing. And there's this concept in Coach that I really love. And in fact, I just co-promoted the Paradise Tattoo Gathering last month, and I went through this entire spectrum of what we call the 4 C's. I was not at all confident that we could pull off. I'd never done a live event, especially in the mountains, far away, bringing tattooers way away from all of their clients. And there was a lot that was scary about that to me. And I was not confident in our ability to pull it off. But the Coach concepts are this, is that in the 4 C's, the first C is actually is making a commitment. You have to gain some clarity on what you're looking for and make a commitment. This is what I'm going to do. And of course, all these obstacles are going to pop up in your way, and so you end up going through a period of courage. And so courage is the second C. You have to have courage. You make the commitment first, then you go through a period of courage where you're really struggling to get through that, and that is the hard part. But through that courage, you develop a new capability, which is the third C. Only through having a new capability can you become confident, which is the final. So when you started with confidence, you're actually starting with the end, and you'll never start there. So if you're waiting on the confidence to show up to make a decision on anything, you'll never make the decision, because confidence comes after the commitment, after going through the period of courage, and after developing a new capability. And so, of course, once you get through and you become confident, what entrepreneurs do, what artists do, is we jump back into a new commitment and go through the courage all over again. And it's just a never-ending cycle. And it was interesting to me feeling it, because the event was a success. And I look back at it and I go, wow, that for the first time, because I had an event that was a deadline, I experienced all of the C's over last summer and then to the fall. From, all right, we're doing this. These are the dates. We put the deposit down on the place. We're doing this event. Through all of the courage, which was like 90% of it, because it seemed like it was going to be a shit show the entire time. course, going through the event, we did develop new capabilities. I
Sure.
understand what it looks like now, how the event happens.
Yeah.
And now I'm confident that we can do it
Yeah.
again.
I love that. Yeah. I haven't heard it like that. And it's so clear and relatable. You can visualize it. It's great.
Yeah. Thanks. That one I come to a lot. I really love it, and especially for something in like what you're doing, where you're taking people out of their comfort zone for folks who have never saved a dime or don't see or are scared to death that they need every penny that they earn.
We have a lot of clients that have actually saved a significant amount, but they don't really know where to go with it, what to do with it. I've talked to people who've talked to multiple financial advisors. I'm like, well, how come you didn't do it? How can you just do the thing? And they're like, I don't know. It's just doesn't feel right. I'm like, we need to talk about that. And so we have weekly mindset calls. We actually have 2 every Wednesday. And man, I always feel like people get catapulted into the 4th dimension. They just see things that you can't even unsee it. Once you've seen it, once you've seen yourself from outside the fishbowl and you're looking in and you're like, damn, you won't let yourself, you might a little bit, but you'll catch it. You'll be so aware when you're doing the thing or thinking in that modality that does not serve you because you saw it so clearly before. It's really hard to stop seeing it, but it lives in your blind spot. And so you're never going to see it. You're like looking around and it doesn't matter where you look, you don't see it. And so that's what I love about coaching is it reveals my blind spot to me. And these conversations, I sometimes have a hard time like describing to people like, what is mindset? Like, what do you mean mindset? And it's like you're the fish in the fishbowl saying like, what do you mean fishbowl? Where's the fishbowl? I don't see a fishbowl. But we even had this one woman, she like did the course and she's like, Ryan, honestly, when I signed up, I was just like, I need that system that you got. Like, that's going to help me out. I thought the mindset stuff was bullshit. I was wrong. I was dead wrong. And that was what she said at the end. I just love that testimonial because it was so honest, Yeah.
One of the sayings I've heard along those lines is that you can't read the label from inside the jar. So you really have to that's kind of, you don't know what you don't know. Yeah. So are you, if people are interested in, in working with you, we're talking about having a good wait list now and you're working with maybe you're at a point where it's difficult to scale. Do you have plans on how you might scale it to help more people?
So we are hiring, we're training some new coaches. We're hiring a team. We're making whatever adjustments we can. I mean, the first and foremost thing is like, I would rather not grow and just keep serving the number of clients that we serve. We usually have about 20 people join this course every month, and they stay within the live calls of the course for 3 months. We can take on new clients. We are taking on clients. We just can't take, at the moment, we're like 2 weeks booked out with phone Zoom meetings. These hour-long strategy sessions is really what they are, and they're free. It's an hour long. It's really, for people that are seriously looking to make some changes in their financial situation, but they don't know what that looks like. And so that's the purpose of the call, is to start to look at where you are. And I look at it as like on the map. Where are you? Right? And okay, well, we want to get here, but first we need to know exactly where we're located. So we get clear on those 2 things, get clear on what you want, and then what is that strategy that's best going to serve you there? What's the easiest, cheapest, fastest, best way to get you there? And then if it looks like I can help you, then you can learn what it looks like to work together. And then if I can't help you, you're fucked, and it's too bad. So go. No, I'm joking. Well, we point people in the right direction all the time. Sometimes we meet people and it's not the right fit, and I don't want to work with people that it's not the right fit. So we always do our best to point you in the right direction, get you whatever resources, people you need, so that you're always leaving the call knowing what your next step is, whether we work with you or not. Yeah. That's really important to us.
Yeah, no different than being good at tattoo consultations. If you're not a good fit for that,
but I know someone that's really good, I'm going to point you their way. Yeah.
So how do folks reach out if they are interested in getting on the list?
Yeah, Instagram. If you want to learn more about what it's like to work together, I'm very active on there. I try to chat with as many people as I can. And if it seems like it's a good fit, then I can book you a call with one of my coaches. Like I said, we're booked, but we'll have availability opening up for sure. So yeah, you can. That's really right now the best place. I mean, you can email me if you want, but I just find I try to, a lot of tattooers say no DMs, but then you've like made it hard for your client. Like a lot of people don't like dealing with email. Even like, we were DMing for a while, then we lost, and then we were emailing, and it's like, I just try to make it as easy as possible for people to communicate with me. So DM me. I'm very active there. You can always email Ryan Roi, ROI, at theartfuldollar.com. But Instagram, Ryan Roi Tattoo. I get people all the time that like, I did a lot. I've been speaking at some conventions, and I did this whole talk on the waterfall money system and saving, and then the guy raised his hands. The first question is like, is that your real last name? Because return on investment. It's my real last name. It was not planned that way. It wasn't. So Ryan Roi Tattoo, ROI. And I'd be happy to chat and see where you're at and what's needed. And looking forward to it.
Well, man, I think, and I'll make sure to link to all that information in the show notes and on the deep dive page that we do. But I think it's something that obviously the tattooers have needed for a very long time. And you're absolutely right that although financial services have been available to tattooers forever, there's something about, we love the for tattooers by tattooers type of mentality, sure. Someone who comes from the same world. And so I think what you're doing obviously is super valuable.
And I don't know financial service professionals that do what we do. Like if I knew there was another place to send you to do exactly what we do and have the mindset conversation and talk about the relationship and set up these automated systems, like we're not like competing with anyone. I don't know where people go to do what we do. And I really tried to make it this unique experience. It's important to me that it is. Yeah. Because I think money needs a unique solution, because clearly look at the world, right? The solutions that are available aren't really working. So let's find something different that works.
Hey, thanks again to Ryan Roi for taking the time. I hope you got some good information out of that episode. Still hanging out here in Puerto Rico. And I'm going to hit that island right over there in just a few minutes. I'm excited about that. So thank you guys, as always, for supporting what we do, and I'll see you next time.